Morning, Steve Freeman in Chicago with the morning grain comments. Well, happy Thursday. Overnight prices a little bit higher. We continue to see reduced volume in the grains as we head into the holiday season. As far as the news is overnight, I think number one thing is that we continue to hear talk that Sino-Grain will be in before Christmas to buy their final 2 million tons of beans, a total of 5 million tons for the reserve. Since they started buying, prices of soybeans have dropped and charts look negative. Some people say, well, why is that? If they're buying, why are prices going down? And it's kind of like selling the fact that their 5 million tons that they put in reserve is not necessarily going to change balance sheets, especially global stock situation. We also noted that South American weather is improving. The dry areas of Brazil next week should get rain. The wet areas of Argentina should be drying out. So that might be also offering some resistance to the marketplace. So, you know, when we look at the March beans overnight, taking out the 909 level on the downside could suggest a trade down to 892. And I think that there are some other concerns in the grains that when you look at what the stock market did yesterday and what it has been doing, there might be plugging in some concern about global economy declining, especially in Europe and China, and that might reduce the demand for food products. Over in the corn, it seems like farmers selling above the market puts a lid on things until we know more about South American weather and we know more about does China come in and actually buy some U.S. corn, and is that going to make a difference? The market's still looking for more acres next year, bigger crops worldwide, and we'll just kind of see what the balance is with stocks outside of China relatively tight going into the 2019 season. So again, 379, 380 on March corn is pretty key support. You take that price out and we probably could go down another 10 cents. Still think corn is in a pretty broad trading range, and we're not going to break out of that range. When you get to the lower end of the range, consumers buy it. When you get to the higher end of the range, the farmers sell it. In the wheat market, we'll be all watching Russia. Russia is supposed to have a meeting tomorrow. Black Sea prices continue to be relatively cheap. Egypt's in for a tender. The only offers from the United States is hard wheat. Some people are asking about why isn't cheaper soft wheat offered to Egypt, and the question is some of the strict requirements for quality that Egypt has in their sales. So if Russia starts limiting exports, we could get some demand that could help prices. But overall, the fact that next year we could see as much as a 40 million ton global increase in production back to normal limits the upside in wheat unless there's a weather problem. So key support in the wheat market is around the 520 area in the March futures market. You take that out and you'll probably see more technical selling. Outside markets, crude's lower, dollar's lower, stocks are trying to move up a little bit higher, but again, the technical signals in the stock market are pretty negative right now. As always, these are my thoughts and not those of ADM or ADM Investor Services, and have a safe and profitable trading day.